I surrendered my hammer and my screwdriver and took back my pencil and my calculator, and I jumped into note investing. All I had to do was touch the paper, and it was connected to the real estate, only in a different way. I wasn't connected to it. It was just through the paper it was connected. It was my collateral. Like everything else in this business, it's a relationship business, and you have to be able to be open-minded and look for those people who share your same passion.
I am very happy today because I am bringing an amazing guest today that is going to talk about a very unique real estate asset. And what I love more about these guests is that she has found a way to align her passion and her impact with her business to make money. So I want you guys to meet Cindy Coleman. Cindy, welcome. How are you today?
I'm great, Jen. Thank you so much for this opportunity and the ability to speak to about people about what I do in note investing. So thank you very much. I'm looking forward to this.
Yeah, I'm super excited. I mean, there has been an entire journey for you. You have done multiple real estate strategies from flipping to note investing. So can you tell us a little bit of how do you start in the business?
Yes. So I came from a 30 plus year background of working as an insurance executive for insurance companies as property and casualty. So I did property underwriting for a while, started there, moved into other lines, then ran regions, branches. And finally, one day, that entrepreneurial spirit just kept nagging at me and nagging at me. And I finally said, you know what? I'm going to fire my job, and I actually watched a 3 a.m. infomercial and joined an educational program, fired my job, and I jumped in with both feet. So I started my journey learning how to fix and flip. And it took me about a year to find my first job. Or I'm sorry, job. I like that. Do you like that? My first job. It's like my first project, which was a job for me at that time. But I found my first project and I started flipping in Tennessee. And I immediately jumped into four all at once, which was not what I would recommend for any new investor. So, but I did it. I was so eager to do it, even though it did take a year to find my initial, project and stuff. I did it. And after, the fourth one, I'm just like, I can't do this anymore. And along the way, I was learning about notes. I heard this thing about notes, and it's like learning how to be the bank and buying mortgages and borrowers making payments to you instead of to an actual institution. And I'm like, you can do this? I was amazed. And so I took some courses, and I even told my husband, who's my partner in my business, I said, I don't know how to explain this to you. And it's actually very simple, but it seems overwhelming. But I think we should move the real estate business over to this. So he signed up and went to a class. He got it right off the spot. And so we made the decision to move from flipping to note investing. So I surrendered my hammer and my screwdriver and took back my pencil and my calculator. And I jumped into note investing, specializing in the non-performing. So that's really how I kind of started into the note business, and I've never looked back.
So how how do you or what do you love about the non-performing notes? Because we have performing notes and non-performing notes. They're different. The diligence is different. How do you approach it is different. But what do you love about the non-performing notes and what you did not like about flipping? Because I think it's important for people to understand,
Yes.
what they can do.
Yes. So, a non-performing note is basically somebody that has stopped paying on their mortgage. And a note is basically a promise to pay. And the thing I like about the note business in general is it is collateralized debt that I'm buying. And so it is collateralized by the real estate. the property. And I usually do residential. I'm only first position, and it's collateralized by their homes. So I like that. But it's like, why did I buy, or I like the non-performing? Because non-performing, I can buy at a deeper discount. And I like to compare it to people, though, those who fix and flip homes. They buy a distressed property at a deep discount. Same thing with a distressed note. I buy at a deep discounts. You take the property and you renovate it, you fix it, you make it look livable. I do the same thing with the note. I take it in, I try to get that borrower or the payer back on track in making payments and stuff before I have to do my very last resort. But then I also, once I get them back on track, then I flip it, okay, and I'll sell that note back to a bank just like a fix and flipper would sell it to a new home buyer. So it's the same concept. So I'll flip back to a bank or whatever. And sometimes I even keep it as a performing note and it's passive income for me. So performing to me is like mailbox money. You don't have to worry about repairs, taxes, insurance, anything like that. It's like that's the borrower's responsibility. So it's the borrower's house, but you hold a collateralized debt, the loan on that, and it's a note, a promissory note with, their promise to pay you back based on an amortization table with between principal and interest for a certain length of time. So that's outlined in the note. And it's like, and as they pay, you just sit back and you don't have to worry about it. And even tired landlords, I love to talk to them about notes. So it's like, a performing note is just like having a rental, and then you hire a team of servicers and whatnot, and you sit back and just, enjoy the passive income and not have to worry about a tenant calling you because their toilet broke, or they haven't paid their rent and now you have to evict. I mean, it's different in different ways, but it's very similar, just a lot easier to manage.
I like that. So pretty much you're comparing it with flipping and rentals. It's
Hmm.
just instead of flipping a house, you're flipping a note. And
Yes.
instead of like renting a house, you pretty much are getting the payment like the note, right? Which is going to be the rental. So,
Right.
and how do you find that? Because I know that a lot of women go out there trying to find what really inspires them to do this type of real estate assets. And as you and I know, we have the world of paper, which is what you do, notes, non-performing, performing, and probably a little bit of tax liens that falls in the paper. We have the properties too, that and the strategies that people love, flipping, development, retail.
Yes.
What do you have to do to really find your passion in this journey of real estate, Cindy?
Well, first of all, it's like it's a relationship business. Like everything else in this business, it's a relationship business, and you have to be able to, I think, be open-minded and look for those people who share your same passion. So I do buy, my sources come from, hedge funds, private equity groups, um, local regional banks. There's even online platforms that you have access to. And, it's just a way, there's a plenty of like networking, online webinars and stuff that you can connect with these people. A lot of people have started their own groups. And honestly, it's showing up and asking for help. I will say the community of notes is very, very supportive. Everybody's willing to help everybody on the notes, answer any questions that they have or give them any help. There's I mean, the one thing I will say that you need to be careful of is people selling their notes because it's a problem first. And so I like to like buy my notes directly from like note brokers through private equity groups or whatnot and stuff, and then I like to get my education separately.
Mhm.
So it's like there's plenty of places to get the education, because I don't want somebody selling me on their program just to turn around and dump me on notes that are not being turned around. So, I kind of make sure that they're separate, and there's plenty of groups that are just education only. So I like that. There's no selling, nothing. It's just strictly education. So putting yourself out there in that community and stuff, and you will learn, and you'll find how accepting, even if you're new, just starting in the note world versus the experienced people are so willing to help. And that's one of the, one of my goals is, and my passion is to create a legacy of people in the note investing world and stuff, because it's such an amazing alternative asset. I mean, you can do it from your home, you can do it in your pajamas. All you need is, a phone and an internet connection. You never need to leave your home. You never need to be close to the property. For example, I'm in California and I invest out of state, but I just want to create a legacy of people who know how to look for the red flags and whatever, a community of note buyers that are doing the process the correct way, doing the right thing the right way the first time.
Yeah,
So, and like you said, when you're learning something new, we all make mistakes
yeah.
and we all learn from our mistakes. It's just, oh, it's another education, but I'm here to kind of help those people and make sure certain things, like they're not overpaying on price, they're not getting drunk on the yield and stuff,
Yes.
so things can change. So it is a numbers game, and it's definitely finance versus, you know, rehabbing property. So
Yeah.
it's like I don't touch the property at all. So it's and I think everybody has different skill sets. So it's like, I'm just passionate about those that are, if they feel they don't have the skill set with, rehabbing a property, it's like, let's talk about the note experience, so going from there. So that's really what, overall what my passion is and stuff, is to help people go down the right track the first time.
That's amazing. So let me summarize this to make sure I understood you correctly. So first you go to the flipping journey. You say I'm gonna get a full blast experience. And
Yeah.
you were in LA, but you were flipping in Tennessee, and
Yes.
you went all full on, and you say, you know what? I don't like this. I don't like this. I prefer the financing side. And then in the financing side, you find alignment with who you are, how you interact in business, what do you enjoy, and it just happened to be notes. And that's how you find your passion. So you try
Yeah.
different things, do things, and you're like, I love this one. I'm staying here.
Yes. And I will tell you, my journey started off, I had really bad shiny squirrel syndrome. So I was like, oh, look what, Jen, I see how you have grown. And it was like, oh, look, she's raising capital. Oh, look, she has hotels. Oh, look, she's developing. Oh my gosh. I want, all this stuff. I mean, short-term rentals. I was looking at all this stuff. Oh, that sounds interesting. Oh, what about, leasing and stuff, start leasing, doing, options and stuff, and different things. And so finally, I just kind of came back to, I still have to touch the real estate and I have to manage the real estate. And what inspired me the most in the note space is that I didn't have to do that. All I had to do was touch the paper, and it was connected to the real estate, only in a different way. I wasn't connected to it. It was just through the paper it was connected. It was my collateral.
Yeah. Yeah. I mean, I love that. I love that because you have to figure out what you're passionate about. And also I have seen you grow, right? And I remember when you learned how to raise capital to start growing your business. So tell us about that journey. And and I will ask you another question too, but let me bring it now. You also do something specific because your capital raising and the way that you structure deals, it aligns with who you are too. So can you tell us
Mhm.
about that growth after you learn how to raise capital? Where are you heading now? Because I think it's amazing.
You're so cute. Anyways, yes, I am a little bit different with raising capital. So I do not um, fund, I don't syndicate and stuff. And I did learn from the very best, and that was from Jen in raising
Yeah.
capital. And I definitely learned what to say, what not to say, and be careful I'm not putting liabilities on myself. So Jen, you are the boss, you are the badass when it comes to capital raising. So anyways, but I do one-on-one. So I don't want to fractionalize any kind of an asset or anything like that unless they have a true partnership and they're coming to me as a joint venture or a joint partnership in an LLC or whatever it might be to buy a note under that entity. So I don't want somebody coming to me and, oh, Jen's giving me 50% and here's Cindy's money and we're going to buy a note together. I don't do any of that. It's one note to one investor. So how I raise capital is I basically have been out there. I accomplished one of my biggest fears, and that was public speaking. So I've been doing a lot of public speaking about the note business and how you can like get into this and stuff, and even at low levels. And you don't really need an LLC. I always recommend it, but you can even do it in your personal name or in your self-directed IRA. I mean, it's amazing to do it in your self-directed IRA. But I raised the capital. I had a lot of capital during COVID, and I deployed a lot of it into notes, use that same methodology. And some people like me to manage the note for them, and some don't, and some just want to do it. And I'll just, I send a referral fee if they know how to do notes. But I actually call my people that I raise capital with my capital partners.
Mm-hmm.
And so I vet them out, and I have a list that I give every one of my capital partners when I raise capital, and it's my mission, and it's on my business card, and it's very simple when people ask me what I do, and it's keeping families in their home. That's really it. And people are like, what do you mean by that? So it triggers a little bit about what I'm doing, and I can open the door about talking to notes, but that's really what I want to do. And then I have all my core values listed. And the top one, and my motto is do the right thing the right way the first time. So that's kind of it. And that means, integrity, transparency, just opening up the real book and who it is, and acknowledging that even in notes, it's a risk. It's like I can buy a performing note for a passive investor, but guess what? If it goes south, the only way it can go is non-performing. So you have to be ready for that. And when I find a deal and I present a deal, I always present it to them with a very conservative worst case scenario. If this happens, which is generally we have to foreclose on the home, I use that strategy to show them, if this thing, I mean, everything goes right, you could make this, but I never tell them what they could make. I always want to like under deliver, and it comes out better and I look like I'm a genius. But it's so I want to make sure that they align with my same values with any kind of investor that I work with. So with me, I vet out anybody that I work with. I want to know what your experience is. I want to know like what you're looking for, what your goals are, and then I'm like, this is what I can do. How much capital do you have to invest? And then I go from there. I always require or ask them to keep about 25% of their money in reserves, just in case something goes bad.
Yeah.
Attorneys are expensive. Probate, if you have to go through probate, your borrower passes away in the middle of the note, you have to deal with some of those things. And attorneys, they cost money. And so that has really worked well where, I'm letting people know, there are some risks that you may have to pay a little bit more. I mean, we have servicing charges for our servicers. All the original paperwork, I set them up with a custodian. So I don't want them to lose that original note.
Yeah.
I've had people say, oh, I'll just keep it. I'm like, no, I'm not going to let you.
Yes.
So, because it is different and stuff. If you lose that paper, you are buying paper.
Correct.
So that's the trick.
Yeah, and I love what you say. A couple of things. I'm gonna go back to something. One, you separate education from the note
Yes.
performing, right? And what I love about what you do is you're bringing aligned capital with
Yes.
people that you want to partner that shares the same values, but beyond that, you show them in the way how to buy notes, right? So
Right.
they partner with you, you share your expertise. You are not there telling them this is how you do a system and trying to sell the notes that you collect. But also something that I notice about you, and I love that you take that to heart, right? In our conversation, is that one of the responsible things to do as a capital raiser and partner in deals is underwriting to the risk, the project, to reduce the
Yes.
amount of risk. And that's something that you have done. I know that you call it conservative, but what that means is you take a deep discount and get the deal for the right price based on all the things that can happen. And I think that a lot of education out there in the note space doesn't show that. In fact, in a lot of real estate too, right? They don't show you
Correct.
how do you manage the downsize. So
Yes.
tell me, what is that process? Because I also noticed that people start asking you, hey, Cindy, can you help me buy this note? Tell me, how does that work with you? How is that? Because I know I'm getting a lot of great feedback from a lot of friends. I'm buying a note with Cindy and all of that. So explain me how
Yeah.
that works.
Yes. I usually when I look at a note, I reverse engineer.
Mm-hmm.
So I never look at the interest rate or whatever on the note itself. I mean, I look at it. And today, nowadays, a lot of distressed paper, believe it or not, and stuff is low interest rates. So, in other words, it may not be like the exactly from the borrower that's distressed, but if I'm buying it from a hedge fund, as you may know, Jen, it's like most notes are sold before you even make your first payment.
Yeah.
And so I'm considered the secondary market. So I'm backing up here a little bit, but I'm considered the secondary market. And so the institutions and stuff like the Chases, Wells Fargo's who buy the mortgages, a lot of times they'll sell them to private equity groups and hedge funds, and then they sell them off to me, who I am part of the secondary market. So that's how notes kind of trickle down to me. And so it's like, you'll see people that'll want like what we call over par, so over 100% of the value of the note. And we buy off of unpaid principal balance.
Mm-hmm.
So I'm buying debt, I'm not buying equity.
Mm-hmm. Yeah.
And then I kind of reverse into it. So if I have a low interest note I'm buying like at 3%, my discount is going to be very significant. If I'm trying to obtain, my goal is to get anywhere from a 10 to 12% yield or return on my investment. So I have to discount that note incredibly low. So on the reverse side, if I have something that was written at a 12% interest rate and stuff, that's pretty good. I may not have to do anything, but if it like all of a sudden goes south and it's distressed or something, or they need to refinance, or if I have to do a loan modification. So I kind of reverse backwards and I try to like build like a budget and say, okay, we're going to need a servicer. Do we need to force place insurance? Are taxes all caught up? Different things. Do I have the custodian? What's our exit strategy? Are we going to hold it as a rental? Do we need to do a light rehab? Or are we going to do like, a full rehab? One of my exit strategies is like selling it at the foreclosure auction.
Mm-hmm.
So I can collect the amount of debt, and if I can get the bid higher, that goes back to the borrower, but my debt is covered.
Yeah.
And so it's like a payoff on the loan. And if I bought, like for example, I have an unpaid principal balance at 50,000 and I bought at 50 cents on the dollar, that's 25,000. So if I go to, I'm going to get my 25,000 and it's higher, or if I take back the property and say it's worth 100,000, well, then I really can make some money. So if
Yes.
nobody bids at the auction. So there's different things. And with that gap, that in between that margin, then I can decide, do I want to hold this as a rental?
Yeah.
Do I want to? I mean, I normally don't, but I do have note investors that want to hold it. If I have a note investor that comes to me and basically says, I just want the property, they're probably not a fit for me.
Mm-hmm.
And that's because I do try my hardest to keep that person in their home. I really don't want their home. I don't want to touch the real estate. I just want them to make their mortgage payment to me because again, that's what I purchased is the debt.
Yeah. Yeah. I mean, you brought so many great points, Cindy, and especially how you even acquire this. And
Right.
this is really important because a lot of people buy real estate wrong. Whether it's paper or property, they buy it wrong because they are paying for the equity that do not exist. And it's really risky when
Yes.
you buy exactly on the intrinsic value, like you say, the discount on that data specifically, you are paying for the intrinsic value of that paper, not only
Yes.
reducing the risk, but also evaluating the market inefficiency when that note was drafted at the moment. And that also apply for a lot of properties. I mean, I am heartbroken to see many multifamilies being lost because
Yes.
they pay prices that were based in the equity and were based in the rental growth. And today they have lost everything because the rents went flat or reduced. The equity dropped so big because they miss exactly what you said, paying for the value, the intrinsic value. So and I can see it happening over and over again right now in real estate. So this is
Yes.
the moment that as you share this lesson, pay for the value of the asset,
Yes.
not for the equity, will be critical to reduce the risk to getting real estate. Yeah.
Yeah, and I go off of the three P's. Okay. And I have the payer, which
Mhm.
is the borrower. I do all my underwriting on that person, obviously, their credit, whether they have they had bankruptcies, all that stuff. And that kind of adjusts my rates. And I have guidelines, that I look for credit scores and all that different thing. So I have the payer, I have the paper. How is your
Mhm.
paper written? Has
Yeah.
it been written correctly and put together correctly? And are you a mortgage? There's differences between a mortgage and a contract for deed. And a mortgage it's in everything, the tax rolls and everything go to the borrower and you're the bank. A contract for deed, it's actually the loan and everything, tax rolls are in your name. You're responsible. And so it's very similar to a lease option.
Yeah.
And so, again, I stay away from contract for deeds, but I will say there is a need for them in the market, a very small need. They're less valuable. It's like if you create any paper, you're going to want to do a mortgage. And those are, there's compliance regulations that we have to follow, but those will sell for top dollar on the marketplace. So I generally buy, trade, and when I create a true mortgage. It's either mortgage or deed of trust. So that's usually what I work with in the States. So
Awesome.
anyway, go ahead.
So you mentioned states and we're getting close to the end, but you mentioned states. Cindy, do you buy in every state across the United States?
Thank you for asking that question. Absolutely not.
No.
I live in California. I love it here. I do not buy notes at all in California, in Oregon, Washington, nowhere along the Pacific coastline. I do buy, I'll look at Arizona. I will look at Utah. Utah's got some really weird laws, so I'm going to back away a little bit from Utah for now. But I look at Arizona, Texas, the Midwest, and the Southeast. I stay away from the Northeast and I stay away from the Pacific coastline. And the main reason why is laws and regulations and foreclosure laws, particularly. It can take me anywhere, for example, in New York, 3 to 5 years to foreclose on somebody. The other thing is California, there's squatter rights,
Yeah.
and you can foreclose on a property. And I have a friend that bought a note in Cook County, Illinois,
Mhm.
foreclosed on it, got the property. The borrower moved back into the house and under squatter rights has been there for 6 years. And
Wow.
they are now going down the criminal path as an alternative method to get that borrower evicted. So obviously, I stay away from Cook County, Illinois, but the laws there are definitely like tenant friendly, borrower friendly versus like, lender friendly or landlord friendly.
Yes.
So I also stay away from states that require heavy licensing costs. So there's some states where, as a debt holder, as a note buyer, even though you're using licensed vendors, like I use this licensed service vendor and stuff, they're also requiring me to carry debt, and that can be as high as $6,000 to $7,000 just for a license and a bond for you to hold debt. So I tend to stay away from those states too that are regulated as far as licensing.
Mhm.
So that's kind of, but again, I'm like, pick a state, let's pick a state and start there. And honestly, another way, there's another type of a note that you can buy. It's called a partial, where you buy so many years of payments. You have maybe let's just use a 20-year mortgage. And you may say, I want to buy 5 years of payments. And that's a way for somebody to get in to this business to learn how to do it and not at a very large investment. And so you would buy 5 years of those payments. You would get the payments every month. And then on year 5 and 1 day, then it reverts back to the original note holder and they take the back end payments. So there's different ways you can structure this. The big thing right now is seller financing. And I think this is an incredible tool to create your own paper and set your own terms and work with that borrower on what works for them. And then we also have, different loss mitigation programs that we use, like loan mods, forbearance, all that stuff. So anyways, and I've used them all.
I love it. I love it.
Yeah.
Well, let me ask you this question, and then we're going to start wrapping because I want people to know how to connect with you. With the market where it is today, that there's so much uncertainty, we don't know if the interest rates will go up or down. Do you foresee great opportunity investing in notes?
Yes, I do. And, I'm so glad that you asked me this. I spend a lot of my time under the hood and I'm dealing with, economists that are reporting daily, all the other statistics. It's not about the interest rate to me, and there's this myth out there that it's like if President Trump gets his way, the interest rates are going to go down. He doesn't control it. The interest rates primarily are driven by the bond market. So, period, end of story. So watch the bond market. The 10-year bond market right now has dropped, and there's other things that are going on. It's like, right now we have a very weak dollar, very weak. Gold is up over $4,300. And it's like, I'm seeing like this big shift. And when you start seeing the wealthy making this shift out of real estate and fighting the interest rate and moving that money even out of bonds and into gold, they know something we don't know.
Correct.
And so that's what I'm saying. Just be very careful. Don't listen to the news. It's all fake. There's some stuff that has happened. For example, school loans on interest rates. And the interest rates, that's having an effect. And the interest rates on student loans was actually funding affordable health care. So people are like, well, gosh, it's like our healthcare is going up. I mean, the biggest issue we have right now, and now the most critical stats that I'm watching on the economy is jobs.
Yeah.
There's a ton of layoffs, and what's happening to like large MSAs, metropolitan statistical areas, what's happening? Are you getting a migration or are people leaving? Is there a high number of foreclosures or what? I will tell you, I have some tools, and I just for fun, because Austin is has been on the news lately.
Yeah.
And so I put it in for the Austin MSA, and I basically said, how many delinquencies are in, I want to know how many people are delinquent on their loans and stuff. And 1 out of 6 homeowners are delinquent on their homes in just Austin.
Yeah.
So this is a tremendous time for note investors to come in and help those people. Help them, get them on plans that are affordable. If you can create new paper, give them a fresh start, carry the loan. Not everybody can, but if somebody's looking to sell, maybe you could step in and maybe help. Maybe they know somebody that wants to buy the help, or you could help another family get into that house by doing seller financing. And, at the end of the day, if you're carrying the note on that, you can still have a note and still do seller financing. And so, it's just, you write the contract and, and then you continue to pay off that underlying debt. And so that's another myth. But it's like, I mean, credit scores, because of unpaid student loans, there was fake FICO scores out there. So don't even believe the FICO scores.
Yeah.
But it's like, it's impacted the credit scores of borrowers 200 to 250 points on their credit reports.
Wow.
So now they're starting to report FHA. It's a mess. There's people out there that were filing claims on FHA and kicking the can down the road and kind of restarting. That's finally come up. So FHA has kind of blown up a little bit, if I may say. And And it's like, the student loan people, if you're delinquent on a student loan, you will never be able to get an FHA loan. You're unbankable at this
Yeah.
point. So even though you say, I'm not going to pay it, well, you'll never own a home. So
Yeah.
you're going to be a lifetime renter, but your credit score is also going to hurt. So even a landlord may not even want to rent to you.
Correct.
So there's some consequences with this whole thing that have come out. And I'm just kind of watching those little data points and a little bit, I see, we're chipping away at the economy and trying to make it a little bit better and turn it around and, maybe, stop being the paycheck for everybody outside of the United States. But it's like, it's now kind of we're gonna feel pain for the next year. And I think the note people can really help those people who are feeling pain. If you're an entrepreneur, the banks aren't lending.
Yeah.
It's like, and honestly, I would much rather work with an ITIN borrower. They're here legally, they pay taxes, they have their green card, and they're all cash.
Yeah.
And I always advertise, like if I'm doing any kind of seller financing, I tell this to everybody, don't advertise, I'm doing seller financing, because that's what you're going to attract every, Tom, Dick, and Harry that can't get a loan. It's like, you know, seller financing is available to qualified buyers with large down payment
Payments.
and
Yeah.
stuff, because you still have to collect that. And I will tell you, statistics show that even on FHA loans, you put 3.5% down, they're more likely to become distressed than the other people that put 20% down. So you
Correct.
want somebody to have some skin in the game, and stuff, and not carry their load, and you're making their payment, paying their taxes, all the other stuff. So
Yeah.
anyways,
Yeah.
it's
There's going to be
it
a
just
lot
a
of opportunities.
yeah, and I just think, and I'm seeing people that, now they can't pay their property taxes. Now with notes, the only thing that can come in front of me is unpaid property tax.
Yeah.
I'm at the top of the food chain. So
Yeah.
I'm not going to have their credit cards come in front of me and I'm going to get wiped out if they file a bankruptcy. No. Even if you file a bankruptcy, I'm at the top of the food chain
Yeah.
unless they haven't paid property taxes. And so those go to the tax deeds and tax sales and stuff, but as a note investor, oftentimes you have to advance that to protect your investment. They
Correct.
still have to pay you. It's just added to their balance. But
Correct.
it's a lot. But it's not as difficult as it seems. It's just very regulated. And as long as you work with somebody that kind of understands the regulations and how it works, you're going to be fine. And once you're hooked, you're hooked. I'm telling you, I can't even imagine going back to flipping.
Yes.
Once you get hooked on notes, it's very, very lucrative and it's a great business. And I'm keeping families in their homes. So it's a win-win-win.
Correct. Which that's what I love of what you do. I mean, a lot of investors do it for the opposite. I'm not judging that is right or wrong, but it's the
Right.
fact that you can bring your passion, your impact, and as a woman, that's something that we value a lot when you can do something for the communities. So having these type of investments that allow you to help families too is very fulfilling beyond the money. Yes, there's good money, but having that, and that's why I wanted to bring you to these channels so women see what they can
Yeah.
do, right? When they move capital and they have
Yeah.
opportunities like this.
And
So,
right now, I think the crisis that we're having in the United States is affordability. And, I also have a nonprofit that's for, based on, housing, affordability housing and stuff. And it sounds like, oh, I might be doing Section 8. No, I buy notes in my nonprofit because that is really my mission and my passion, keeping families in their homes and affordability, affordability housing and stuff. So it's working with these people and finding ways and being creative. And it's not going to work for everybody, but certainly if I see properties all the time or notes and stuff, and if I know somebody that's looking for a home, I can I can guide them to that. And
yeah.
so it's a great way, I think, to make a positive impact on communities. And you can diversify as an investor, you're diversifying your portfolio. I mean, I invest in all my like target states. I mean, right now I just bought a small pool of non-performing small balance loans. And I'm all the way from Kansas, Kentucky, I have one in Georgia, and then, all the way out to Kansas. And, I'm all over, Ohio. So I'm all over. And it's
Yeah.
just, you have different teams and you have relationships in those states. And so
Yes.
it's a great way. And I'm helping all of those families. So I've already got two back to performing.
Oh,
One, I approved a forbearance. She was going through cancer treatments, and of course, I want to help her and stuff. And she's like, she made her first payment. She says, I'm going to pay extra to pay down the forbearance. And I'm like, wow, of
wow.
course, I'm going to help this poor lady. I mean, life happens. And that's what
Yeah.
you have to understand in notes. Life happens to these people. But there's one thing that I think we always need to remember in notes is they're still human beings
Yeah.
and they need housing and they need a roof over their head. And I'm very, very passionate about that.
Yeah. I love that,
So
Cindy. So
yeah,
if people want to connect with you, where can they connect with you?
they can visit my website at www.cjcpropertysolutions with an s.com. And there's a little channel, there's a little thing, info. If to connect with me, it'll go to, and if you want to email me, it's info@cjcpropertysolutions.com. That's great. And I'm happy to talk to you. I'm happy to like tell you how we could partner and work together, how I could coach you on a note and get you into notes and start you going and refer you to some different, webinars or YouTube channels that might be able to give you a little bit more education and stuff. So, I'm happy to talk to people about notes and get them started if they're interested.
Perfect. Well,
Yeah.
thank you again, Cindy, for being with us today. We
Yes.
really appreciate you.
And I want to thank you, Jen, because I have so much gratitude for me because you have taught me so much in this real estate business. And most of all, as a woman, you have given me my confidence. I'm now like, I still have my I am statements on my thing, be confident, be fearless, and I think my biggest one that I learned from you, Jen, is to be resilient. And that is one of my golden treasures from you that I have always kept in my heart. And not only that, you're such a true friend and you inspire me every single day.
Oh, thank
So,
you. Now you're
yes,
gonna make me cry.
no, no, you're my girl. So, anyways, I just love you and the way you raise capital is amazing.
Thank you. Thank you,
Uh,
Cindy, for sharing all of your knowledge with our audience. And I wish to have you again in some, I don't know, pretty soon.
Yeah, it's like, once things, I mean, it's getting busy and anytime, if there's stories or anything that, we can share or keep up on what's going on the economy and stuff. All I can say to people is just find your niche and dig deep
Yeah.
and don't
Awesome.
believe
Love it.
and don't
Great way
believe
to
anything
close
that
it.
you're really told. So,
Thank you,
all
Cindy.
right. Thank you, Jen.